Complexity and perfection are the twin enemies of execution. My friends, we keep it as simple as possible. Why? Because Occam's razor tells us the more complicated something is, the more it is likely to break, to not work. So we make our decision process as easy as we can. We have simple charts, but they are effective on stocks and ETFs that are chartable. That's why we do backtracking. Those of you who join us every day, you're learning the nuances. Hopefully you are practice trading. You're filling out your weekly market worksheet once a week. That's what you'd fill out today. And your daily market worksheet every day. And your trade worksheet as you do your practice trades. Doesn't take a lot of work. It just takes consistency. Let's jump into these charts. Stocks are up for the day, bonds down, gold and Bitcoin up. What do we see for the week? Well, we see an up candle on the S&P 500 that has formed, but not enough energy to cause a crossover. The derivative oscillator, that's our leading indicator, still losing downward momentum. I guess you could say gaining upward momentum. Hadn't crossed over into the green yet. And our lagging indicator, the price percent oscillator, has not had enough energy, enough inertia to cross over, so we don't have a crossover. Thought earlier in the week that might happen, but as the week went on, particularly with the downstroke yesterday, that just did not occur. What's up on the 2-day chart? It crossed over going up back on the 1st of July, and then we saw it go up for 4 days, and then of course, what has happened with this last Thursday, Friday, it's fallen just below a really strong, beautiful 2-day trend line. So of course we would not be jumping in when you have that kind of weakness that shows up on your intermediate chart. What's going on the half day? We look at that, we saw where it was up in the morning, a little further up in the afternoon after a down day previously. So again, derivative oscillator still negative. Price percent oscillator is heading up and positive. It's where we are on the S&P. Not enough energy to jump in on an up move. What about the Qs? The Qs rebounding from today's downer, yesterday's downer. We have an up week. It's nice. We had a weekly vertical crossover somewhere around the 150 something, 154 mark, something around there. Again, the reason I'm not giving that is because we're using Heikin Ashi candlesticks. And I'm not going to switch over candlesticks in the middle of the presentation, tell you exactly where it crossed. Those of you who jumped in, you know what you jumped in at. How high did it go this week? Up to a high of 162.76. So again, not bad, not bad. We see the derivative oscillator gaining upward momentum, price percent oscillator moving up. 2-day chart, we saw where things had bounded up there on the Tuesday, Wednesday, and then leveling off just on that 2-day trend line on the Thursday and Friday. And again, recovering some on Friday, up 0.62%. Price percent oscillator still heading up. Derivative oscillator, that's the leading indicator, flat. So I know that you guys have been paying attention to that. What about the half day? Of course, the big downer was on Thursday morning, and then it slowly tried to track its way back up, but not enough energy for a weekly vertical crossover. Derivative oscillator gaining downward momentum. Let's move on from stocks into bonds. Bonds really down for the day, 1.41% after a nice week of moving up. Derivative oscillator, price percent oscillator gaining momentum. 2-day chart, we can see where it's lost some of that momentum in the price percent oscillator, as did the derivative oscillator. Got a nice wick on top, a candle body, not as big as the prior candle body, did go higher than the prior candle body, but again, we see that slow down. You'll see it even more as we look at the half day. You guys want to know why we use the half day? Because it gives us, because we don't use the half day necessarily to make much as far as decisions go, to jump in to a trade or to jump out, but it gives us the smallest wave, and that can be helpful in seeing momentum slowing. It'll explain what you're seeing on the bigger charts. So of course, that's where we see things slacking off down in the morning, a little further down in the afternoon, and still above the 2-day trend line, above The weekly, we can redraw this a little better. No matter how we draw this thing, it burned off a great deal of energy just popping right through. We saw it weakening on Thursday afternoon and then, of course, down on Friday. That is where we are on bonds. Bonds, again, still have that energy moving it up, but it was a big down day for bonds. What about gold? Gold up 0.33%. Now, is gold bottoming out? That would be beautiful. The price percent oscillator is flat. Derivative oscillator still gaining some downward momentum, but it was the first up week we've seen in a month for gold. And that's nice to see. Still negative, though. Look at the 2-day. It hasn't crossed over going up yet either. It's losing downward momentum on the price percent oscillator and the derivative oscillator. And of course, we've had 6 days now of up movement, which is good to see. Half-day chart. We can see, again, we'll need to redraw this a little bit. Really no way to collect. Well, maybe, there we go. We connected 3 candles. We had a bit of a pullback on Thursday afternoon. And of course, things moving back up on gold on Friday. Derivative oscillator still losing momentum. Price percent oscillator moving up a little bit, still positive. So that's where we are on gold. Would I love to see gold to bottom out and a weekly vertical crossover occur soon? That would be fabulous. After these few weeks of down movement, after gold peaking back in early June, late May. So that'd be beautiful. I'm waiting, just waiting. Okay. And don't know that it's going to occur, but I'll be happy for it to occur. Bitcoin rebounding a little bit here at the end of the week, up 2.83%. Doesn't affect the price percent oscillator, still trundling down. Derivative oscillator's been losing downward momentum since we had that big drop down to the $31,000 mark back on the week ending the 11th of June. And of course, that next week it slid over, and then of course it did its lowest in a while, down to $30,221.76. And again, we can just see where Bitcoin, you could call Bitcoin, what is it? Crypto gold, maybe? That's what the big Bitcoin fans think. But not lately as far as losing a lot of energy and momentum. 2-day chart did manage to cross over going up. And again, this is a sloppy price percent oscillator. Why? Because the price percent oscillator needs movement to be accurate. When things move down and up a little bit, down again and sideways, it is, again, it's an oscillator, and it's not going to be oscillating all that accurately. So we do see that the derivative oscillator is still positive, losing a little bit of momentum. But again, not much movement on this 2-day. Now, if that starts to pull away, the price percent oscillator pull away from the red signal line, and we see things heading up nicely, and then a crossover on the weekly, I'll start getting real excited about Bitcoin. What do we see here on the half-day chart? Just sort of as it's cycling its way through, trying to bounce off the red signal line at the end of the day. At this point, that is where we are as we end the week. Still a lot of downward pressure on Bitcoin. My friends, hope that you have a fabulous weekend. For our Patreon members, I hope that you were able to make great use of those 20 weekly vertical crossovers we sent you last night. You scoped those out and you made some good practice trade or two with the coming week getting ready to get underway. Thank you again for all the book purchasers. Thank you for the Patreon supporters. You want to know more about us? Follow the links in the show notes. God bless. All the best from the whole team at Charting Wealth World Headquarters.